Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello, gold friends, looking at the dollar, gold, and then miners. So here we are on the dollar, rejecting from the 10-day moving average resistance again. And this now makes 2, 5, 8, 9, 10 rejections ever since we hit that high. And it's driving the price to the downside. We still have this 99.43 support on the daily time frame. Even though we dipped below it, we closed above that support. So we're seeing a tightening range between the 10-day moving average resistance, which is currently 104, and it's going to be under 100 come Monday. And then we're looking down at that support of 99.43. So this is a potential bear flag with a short-term bounce before continuation to the downside. But where the MACD is positioned, if we get over this 10-day moving average resistance, we are going to see a short-term bounce play out, and we're looking up at 101.02, the high of the last bounce attempt, as the resistance to be watching to stay in that lower high pattern, which is what the bears want to see. So the MACD is very close, but this is exactly the kind of day that the bulls wanted to see in gold in terms of the rejection, the big upper wick of profit taking, and the continued weakness. So looking at gold, this is the hourly time frame. And I had this uptrend support line, and it did get broken when we had the reaction to the jobs numbers this morning. So normally I would move this line because it's no longer valid with that break, but I hadn't done that yet, and then we had the price bounce perfectly right off of it again. So due to the volatility with the data that came out, I'm going to keep it on here just because it has been hitting it so nicely in the past, and it just hit it really nicely again. That consolidation low is 12.1443, and the bulls are looking to continue forming higher lows. So we're looking at resistance of 12.2123, and then up to the high price we've seen of 12.2112. The daily time frame has been unable to close above the 12.20 mark, and we did close, let's see here, 12.1985. So we're not there yet, and I need to adjust this line a little bit. Although, you know what? I'm going to put this line right there, and that is a bull break as far as I'm concerned. I was using 12.20 as a nice psychological round number because that was the top that we hit. But the fact that this is the highest close on the daily chart we've seen on this move, and it has a long lower wick of bulls buying the dip, does give confidence. So look at this 10-day moving average again, holding the first back test, seeing some upside, some pullback, holding the 10-day moving average support again, and closing up fairly strong. So the bulls are pleased with the way the week ended. We're on the verge of a bullish MACD cross here again on the daily, and the bulls bought the dip. And a couple times, both Wednesday and today with the data this morning, we saw gold and the market going in the same direction. And there are times where that does occur. It's a lot more rare than the inverse relationship we're all used to. But just know that there is no law, there's nothing that's saying that that has to happen. It's just the way that things are. The way that it generally happens is market down, gold up, and vice versa. But there are periods, if people are buying gold at the same time people are buying stocks, they're both going to go up at the same time. And that happened a couple times this week, which is an ideal scenario for the gold bulls. So checking in on these gold bulls, the miners, we've got GDX here maintaining the upper Bollinger Band, 24.47, just barely, but we did close above it to remain in breakout mode. We got a nice little higher low and a higher high compared to Thursday, maintaining that the bulls are still in control after that breakout. So that is a good sign as well. We're watching the 200-day moving average resistance of 24.94, and we'll see if the bulls can approach that level. Weekly time frame, nice bullish close above the 50-week resistance. And for the longer term time frames, we're looking at 25.63 and 25.86 as major resistances if the bulls want to break this lower high pattern. So a nice strong close. Again, the pattern 7 higher lows, make that 6 higher lows in a row on the weekly time frame. And with where we close this week, we're certainly far away from breaking that pattern as we enter next week. So it's a really strong pattern of higher lows every single candlestick that has formed on this bounce, and we'll see how long the bulls can keep that up. Let's look at the junior miners, GDXJ. So even stronger, higher low and a higher high, and the close at the high of the day, right at the high, right under. So the upper Bollinger Band, we're closing above that level again. We have the 200-day moving average as support. That is holding now. And the positioning is better, in my opinion, because all moving averages are support on the daily time frame, where GDX still has the 200-day to get through. So that is a good sign for the bulls. Weekly time frame, very strong close. Resistance, we're looking up at 40, and then up at 41.34. Higher lows every week. Bullish MACD cross. Bounce really couldn't have gone better for the bull miners at this point. We had that consolidation, which ended up being sideways consolidation before continuation. And that is all that the bulls can hope for. So gold bulls are in control heading into next week. We're watching gold for continuation and the ability to break the recent high that we've seen of 12.25.12. And the bull miners want to see the dollar keep rejecting from the 10-day moving average resistance and fall through 99.43 support. So pretty good week for the bulls. We'll see if that keeps up. We'll keep checking in. I appreciate you watching these videos. All the likes and the shares and the comments, they're all great. So thank you very much, and I will see you Monday.